From Barangaroo Studios, this is the COB, brought to you by eToro. Invest in ASX shares with $0 commission.
Hello and welcome to the COB. It's great to have your company this afternoon. My name's Kyle Rodder and I'm with Danny Akuye. Danny, well, there wasn't that much follow through in local trade, but the inflation number in the States was broadly welcome, and well, we have finished higher today.
We have. I've got the S&P 200, ASX 200, I should say, up 0.3%, and very much in the materials sector. There we go. The COB 200 also up about just over 0.3%. But again, you had to look into the different sectors because there is a lot of basically profit taking going on in healthcare, whereas the mining stocks are going gangbusters. So I've got the materials sector up about 2.4%, and within that, BHP putting on just over 3%. And of course, there's so much speculation, isn't there, that China is going to have a stimulus package, and Dalian iron ore futures are going for a bit of a run at the moment.
They did. In fact, we'll get to those three themes because I think that's really touching some of those bases there. And well, you did mention that China story, that potential sugar hit, I suppose you could say, when it comes to policy. Now, there was that cut to the repo rate yesterday, but the report...
That was fairly small, though.
That was small, but
yeah.
what was circulating in the group chat amongst the team today was that a potential cut tomorrow expected from the 5-year loan prime rate. That's significant because that's the rate that the PBOC uses to target its property sector.
Right.
And that would be fairly significant.
Okay.
There's a bit of a shift in terms of, I suppose, attitude to leverage in the space, and then also, what areas of the economy it's trying to sort of, I guess, stimulate.
Yep, absolutely. Well, certainly the speculators are speculating that, aren't they?
Yeah, as they would, those speculators.
Exactly.
Okay, so that's the China story. You did talk about the healthcare issue there. We obviously have to talk on this about this Fed meeting this evening. A skipper reports is the question now. A hike seems to be taken out of the equation because of those CPI figures. But again, is this something of an end to the rate hiking campaign, or are we just sort of putting on ice for a little while?
Oh, that's a really good question. It could all turn out to be a little bit of a yawn like the CPI was last night. I mean, market went down, then market went up, and the market might equally digest, a hawkish pause. I am no better, acquainted with what the Fed's going to do than any other expert out there. But the market is basically saying they're going to pause.
Yeah, will you be up at 4 a.m. this morning making sure you're there live?
I definitely will not be up at 4 a.m. watching that. Thank you very much.
No, I mean, sometimes I can't sleep and I'll flick it on, but no, normally I'll probably just wait
look,
until the alarm goes off.
Even if they do, because I tweeted, because Maitland Summersunderland was saying that, they might raise, given what the RBA and the Bank of Canada has done.
Yeah.
But even if they do that, they're just pulling forward a rate hike maybe from July into June, saying, well, we'll do it now and then da-da-da. So I think the market's just looking at the fact that we're near the end.
I'd be profoundly surprised if they hike tonight. It was just so telegraphed. But anyway, we'll talk about it in a bit, but like you said, there is still another hike basically being priced in the future. But let's get across some of the sectors that we wanted to follow.
Yeah, so
here's healthcare, and we'll get to the CSL news in just a moment. But there you can see it sort of spread throughout
absolutely
the space. Moving forward well, are we looking at the... What have we got? Is it the miners next? There we go, major miners. Broadly stronger, and again, that you have to say is that China story would be fantastic if we saw some support for the property sector for our local miners.
Absolutely, and particularly look at Forestescue, up almost 4.8%. So very much, it'd be interesting to see what mineral resources have done. They're probably up 7%, yeah. So basically, some of those higher cost producers definitely rallying off the back of the expectation that iron ore prices might start to move up. And then we get the technology sector, because with big rotation, I do know a couple of the brokers, WiseTech Global, they're just basically saying that, might want to take a little bit off the table at the moment. I think they might have been Citi from an accumulate to a hold, but really it's no surprise given how far and how fast they've run.
Yeah, especially yesterday, we had
they're
basically
up hugely.
Yes, you're in a bit high as WiseTech at all-time highs. and almost the definition, I think, of a sort of a profit-taking pullback, right? I think we actually saw the sector up very slightly in the first stages of the day's trade from memory, and then everyone said, okay, well, that's enough of that for a little while. So we'll keep an eye on there. But corporate news of the day, CSL.
Absolutely.
Profit downgrade, which, I mean, other than the sort of shocks around the pandemic, and they had all those issues with collections and what have you, was pretty rare. It almost returned, it would seem, to sort of market darling status there for a moment, but or maybe it's just not completely out of the wars yet.
A lot of it had to do with currency translation, particularly now that they've got a lot more business exposure between the UK, Europe, China, the yuan being weak against the US dollar, and also something to do with the translations here in Australia because they're investing a lot of money. I think the analysts will probably, they take the currency on the chin, and because you downgrade full year 23 earnings, therefore you have to downgrade full year 24, and they're still expecting between 13 to 18% growth for full year 24. A lot of the analysts listening to the call were really wanting to talk about some of the other elements of the business, like the Bayring margin. So this is the blood plasma, the blood collection, that the margins still haven't returned to those previous levels pre-COVID, but we might hear more about that because I think it might be the stock of the day.
It is, and we'll get to that in a few moments. We'll just skip over very quickly. Auckland Airport was also down today. Obviously, that's up over the last 12 months. Who's surprised? We had the reopening border story there. No, there was news there. It's, I think the dividend payout ratio is going to be
That's correct.
reduced.
Yeah, they were going to reduce that. Absolutely.
Yeah, so that was sort of a headwind there to that, and down 3.7%. The other one was IDP Education, which came up with a upgrade actually in terms of expectations, profit guidance, which we have obviously seen that company in the wars, or the share price in the wars in the last couple of weeks because of some, I guess you'd say regulatory changes perhaps in Canada. It looks like it even finished lower for the day. So that was a very short-lived rally. It was higher briefly, anyway, we'll move on from that one perhaps. Okay, well, we did say CSL was the stock of the day, a core holding in so many portfolios, and we had the three lads together: Henry Jennings, Andrew Violence, and David Koch was the host, talking about CSL.
Bottom line, it's a quality business, but always hostage to what's going to be happening with currency. If you could be sort of getting it in that 250, 260 ideally, that's Andrew the miserable, Andrew the realistic. There'll probably be another couple of days of weakness as EPS earnings downgrades come through. And if you can get it 260s, 270s, I'd be all over this one like a cheap suit. It is a quality business, under pressure in the short term, but long term, what's it delivered long term? So the last 5 years, it's returned around 11.5% per annum. Yeah. It's a really good business. So it's a watch, but come back to me in a couple of days' time. 250 to 270, that's the buy range.
The problem, I guess, is that CSL always upgrades. It never disappoints. Right. And this time it has disappointed. But as Andrew says, let's wait a couple of days, see where it settles. But around 275, I mean, it's probably great buying there. But
okay, well, again, would you say that it still has market darling status overall? I mean, it was such a winner before the pandemic.
I'd be amazed if it still doesn't. It's got to do a lot more than just this, because currencies, clearly on translation, they impact a lot of companies. Yeah. The Bayring thing, on the other hand, the analysts are going to want to see runs on the board in terms of Vifor and all the other operations doing well. Currency translations, you can kind of work with that. But margins and those things are actually important, and I think we'll wait and see what the brokers say tomorrow, but I wouldn't be surprised if that's what they're focusing on.
Yeah, that's far more fundamental, I suppose. Well, let's get a view of our guest for the afternoon. Mark Garner from Macro Capital is at the desk as always on a Wednesday. Mark, great to see you. Have to start with the CSL question. It used to be a stock that really, it traded with a lot of momentum for a while and used to trend. It seems to be very range bound now, and I thought maybe we'd see a turnaround in that recently, but again, back to around 290 per share. How are you seeing the stock at the moment?
Yeah, we've been playing the range for quite a long while now, since the pandemic basically, and And look, every time it gets up around that 310 mark, particularly, it's always wise to be trimming out. We sort of we've been trimming out recently. We're down to, it's a core position for us, but we're down to our lightest. And look, we certainly didn't expect them to downgrade today. There was probably a little bit of luck involved there, but it is one of those sort of situations where we were going to wait until July, August, when there was going to be some reporting, because I think that expansion in their in their blood plasma collection fleet and obviously slowdown in the US economy, we figured basically that the plasma would pick up, or at least start to pick up, and then obviously Vifor would be adding more more EPS value add. So and obviously in the constant currency they did miss by 800 odd million. According to RBC, I think was around about the same as everyone else. It was about 20% lower. But yeah, look, I think it probably presents a buying opportunity overall. We'll see what the brokers say tomorrow. But healthcare does well in a slowing economy, and CSL's obviously acquired, very smart, and they've done a lot of great things over the pandemic, which you can't just expect a stock to go up forever. But I would say at some stage this year we'll break out to above that 325 high, but we'll probably have to wait till the report in August.
So you pick it up here potentially?
I'd probably wait till tomorrow at least and just see what comes through in the general sentiment, but be starting to edge back in now. But yeah, from 280 down to 260 is always a pretty decent buy range. We keep making high lows all the time if you have a look at the daily chart. So yeah, you'd be starting to buy back in. But we got upgraded by 3 brokers not five working days ago. So with price targets around that 350 mark, and whilst this has been a mildly disappointing result, we may see a little bit more selling over the next couple of days, because it's just relied upon that CSL always delivers a great update. So it might have caught a few people who are potentially trying to play for a breakout to the upside into the number. Maybe just caught them out a little bit.
Absolutely. So tonight, a pause and potentially a soft landing.
Well, what about a skip? Can we skip, or we pause, or do we hold, or do we hike? What do you do?
Yes, true. Sorry, a skip. Yes.
Whatever you want to call it, we're going to hike sometime in the next 4.5 weeks. So I don't think it really matters. If I was the Fed, I'd hike tonight, and then I think that sort of does the job for them. I think if they pause or skip or whatever you want to call it, that sort of just drags things on a little bit. I think they can't be liking equity valuations up here. So if you're going to just go in 4 weeks' time, why not really shock the market and go tonight? So I mean, look, I favour them hiking, even though it's only a 5% chance. I'd be very much in the minority, and I normally would go with consensus, but I really don't see the point in delivering a hawkish pause when they could probably deliver almost a 50. It'd be the response to a 50 basis point hike, essentially, which is what they want to do. They want to calm things down in terms of inflation, asset prices, and things like that. So why not shock the market like the RBA and the Bank of Canada have done? And if for the sake of 4 weeks, I mean, does it make any difference? I don't think it does. So but as I said, 95% chance of from the Fed Monitor tool off investing.com, which is usually pretty reliable, but then next month's about 60-70% of a hike. So yeah, we will hike sometime in the next 4.5 weeks. So I don't think it makes any difference if they skip tonight. It'll all be about the statement afterwards. I think the S&P for the last 6 FOMC meetings has dropped 1% after the Fed delivers its statement, no matter what they've said. So yeah, I'm probably not looking for a rally from here, that's for sure, no matter what they say.
Interesting. Okay, so it might be all in the price then. I mean, I guess that sort of begs the question. I mean, do we see a soft landing eventually? Does this, set us up for a sort of Goldilocks scenario? What are your thoughts?
If you go back and look at the last 3 recessions, the markets have tended to do this. They've tended to rally into the recession and then get hit really hard. So bond yields are sitting at 3-month highs, and the yield curve's at 86 under still, the 2s 10s. So, and realistically, equity prices don't actually turn to the downside until that yield curve starts to come back up again. But that, where it's sitting at the moment is essentially one of the lowest points in 40 odd years, and I would expect the that contracting money supply is. I think Apple's got a couple of downgrades recently, but the mega caps have kept on rallying. You've got PE and those big 7 mega caps sitting at either record highs or 2 or 3 year highs. So the market's super expensive. I'd probably be more concerned about looking into next month. Around about July 14, the quarterly earnings kick off again, and there is no way, based on the economic numbers, that these mega caps are going to be able to hold these levels when they update. So I think I think it's just inevitable that we see these come back down. They're all consumer cyclical stocks, these stocks, and they're all rallying on on a thesis of forward earnings from that's 5 or 10 years away sometimes. So yeah, look. And obviously China as well. I think that's really helped our market today. That sort of brought that value back. The US last night was the first time in ages. The materials sector was the strongest sector in the States. So the materials sector on the market maps, kind of like our IT sector, it's a tiny little spot on their on the S&P 500 market map. But it's been a long time coming, and obviously people are getting pushed back into cyclicals a little bit there. I think both on the China move yesterday, China's also announced some tax cuts for businesses as well, particularly targeted at the property sector. So that should be pretty good for that value into the market. But I think iron ore is 20% off its low from less than a month ago, probably about two or 3 weeks ago. Right. So things are all over the place at the moment, and
lots of rotation.
Lots of rotation, but it's a lot of correlations just completely breaking down. So it was nice to see a jump back up in mineral resources today, because obviously lithium stocks around them, in that sector have been going back towards highs. And iron ore stocks have been going up, and poor old MinRes has got both, and they've been lingering down here at the lows. So that's probably one that, if we're going to continue this materials rally, that's a laggard that when it gets on a run, it goes pretty hard. So, and it's around that $72 mark, and most of the brokers have got $100 plus price targets on that.
Yeah, absolutely.
Mark, really great insights as always. It's going to be a cracking 24 hours, and I think we do see you again in the next couple of days on the show. So we'll touch base then. But Mark Gardner, Macro Capital, thanks for your time.
Cheers.
Thank you, Mark.
Okay, well let's get to the leaders and laggards. Okie dokie, starting with the leaders, and hopefully, and there you go, there's mineral resources, like Lazarus, rising from, well, not quite the deep, but it's apparently back from some recent lows. Fortescue is actually quite the same. It was below $20 a share briefly a couple of weeks ago, in far more comfortable territory perhaps, in closer to 22, perhaps for investors really. Very much just a credit call. I'm not sure if there's too much news around that, but mostly commodity-centric kind of day.
Yeah, absolutely. And as we can see too, some of those lithium plays, Allkem, also going for a run. I'll tell you what, I just had a really interesting conversation very quickly with Tim Buckley talking about the solar module capacity coming on in China. It is just humongous, the numbers of capacity going on in solar and batteries and all of that. It's actually worth listening to because it is quite staggering to get your head around.
Just the scale of it.
Yeah, absolutely. So, these lithium plays, well, they probably are due a bit of a re-rating again.
Yeah, and when China wants to mobilise something, that seems to be what it does very, very well.
The factory is 19 times bigger than the largest new factory that's going to be built in America for solar modules. Yeah, okay. 19 times.
It is amazing. I was reading one of those blog posts from No Opinion, whatever I can't remember his full name, but he's the economic commentator in the United States. And he was just talking about, if there's one thing the Chinese does well, it's mobilising capital and people, and just building train stations and all sorts of things in 9 hours, things that would take us months and months and months in the West. Obviously has its drawbacks, but nevertheless, obviously China very much making concerted move in that solar area. But let's move to the laggards now, because while CSL will probably be close to the top, indeed it is the biggest loser for the day, down almost 7% and back below $300 per share.
Yeah, off its lows though. I think it was off more than that. So maybe some buying coming in. I can actually check out the volumes and see how they were.
Well, yeah, take a look at that. You know, Karoon Energy as well is another that we often keep an eye out for. It was down by 6.5% today. Actually, a bit of a mixed bag. We've got our, I suppose, punter's favourite when it comes to
Brain
AI
chip.
on our market, BrainChip, exactly. Auckland Airport, we also spoke about we'll cut to the dividend payout ratio.
Investors do not like that.
No, you never do.
No.
Capricorn, gold has pulled back a little bit. So one that we might be talking a bit about tomorrow too, depending on what the Fed does. If they do what Mark suggests they might do, or perhaps ought to do, and hike by 25, you would imagine gold might be in the wars tomorrow, perhaps.
Well, there was an upgrade today to Evolution Mining by one of the brokers, just saying that had been to visit a couple of their mines, liked the quality of the mines, and just felt that it was time to start adding there. So really, maybe for some of the people that like gold, some of these miners that have been sold off might be worth having a look at.
Okay, dig around for some of those gold miners, perhaps. Let's push on to the small caps now. Anything there that floats your boat, Danny?
I don't even know what Perionics is.
No,
That's
but
a bit
it sounds
embarrassing.
interesting.
Rubicon Water, Mount Gibson Iron Ore. Well, I assume that's off the iron ore prices going for a bit of a run.
Perhaps so. There's a few materials names in there, mining names there. Again, a little bit more volatile, typically speaking. So there you go. Let's go to the laggards now, and just in terms of the small caps, Challenger Gold.
Ooh, that's a bit nasty.
That's sometimes can have people are very opinionated about
Right.
Freelancer on Twitter sometimes. I don't know what the news is there, but it's down 13%. Peninsula Energy, Panoramic Resources, 88 Energy. Again, sort of a mixed bag there, perhaps.
Just worth noting, Perionics is to produce titanium components for the Ford Motor Company. So there you go. That's why that was up
69%.
69%, yeah.
There you go. All right, we'll have to keep that on our watch list from now on.
They have a unique 100% recycled low carbon titanium metal. And they've been collaborating with Ford in terms of designing and testing and manufacturing a series of high quality titanium components.
There you go.
So there you go.
Yeah, we should get you working in PR. All right, let's go and have a look at what's on tonight. I don't know if we have to mention again, but there is a certain central bank meeting tomorrow morning. UK industrial production and trade balance won't be that impactful, but we did have that strong data out of the UK last night, which sort of stoked further concerns about more aggressive policy from the Bank of England. It meets next week. Tomorrow, also going to be very influential. There is that speculation that perhaps we will get the decision, or a decision from the PBOC. We will have a lot of data out.
Absolutely, tomorrow.
Monthly data out tomorrow as well. And our jobs numbers too will come out.
Yes, oh gosh. Well, it's a busy week,
It is a busy week, and then we'll have the ECB the night after that and the BOJ the day after that. So, hold on to your hats. It could be pretty exciting, perhaps. But, I think that's
all
for us. For us. Yeah, exactly.
Absolutely.
We'll just wait for the things to happen now. Isn't that exciting?
Yes, Kyle.
Yeah, it is. Won't be able to sleep. 4 a.m. You'll see me in tomorrow morning, bleary-eyed, excited, and hopefully on the right side of a short trade on the Nasdaq, perhaps.
There's more to life than watching central banks and inflation.
Not when you live by yourself. It's just all my life. Anyway, let's wrap that up then before Dave brings out the world's smallest violin for me. Remember, you can catch up on all the news and interviews on your website, and otherwise, see you tomorrow morning. Could be an interesting one.
Yep. Bye.
The COB is brought to you by eToro. Invest in ASX shares with $0 commission.